Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Tuesday, April 5th, 4:54 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. Not a good day for the market. Not a good day at all for the market. I'll get into the good, the bad, and the ugly momentarily. You'll note market state right off the top as we've added caution to the uptrend, as today was a big negative expectation breaker in the action after some very good action yesterday was a cause for optimism. We came in with a very small gap down, quickly turned green, and then we'll talk about what the Fed did to throw cold water on the rally and have us really trend down the entire day. Check over here on the trend gauge. The arrows, the main arrows are still pointing up for leaders short term and medium term, but the sub arrows, in other words, the direction that we're trending in, are all negative across the board. Added yellow on leaders short term and medium term, and red on long term as the only index that we can get to stay above the 200-day moving average is the S&P 500. So as I mentioned, what happened today, negative expectation breaker. Very ugly day for growth stocks too. There was a strong day for yields, which means a bad day for bonds. So G6 down almost 3%, S&P 500 down 1.3, NASDAQ 100 down 2.2. Really just giving back and then a little bit more the gains from yesterday. Yesterday the S&P up 0.8. Yesterday the NASDAQ 100 up 2.1%, and just poof, watch it go away. It's like that South Park episode, and it's gone. If you don't know what I'm talking about, Google that one. Pretty entertaining. Dow, weekday yesterday up 0.3, weaker day today down 0.8. Small caps or mid caps down 1.8. Russell 2000 barely positive yesterday, only up 0.2%. Really got hit today, down 2.4%. 60/40 bonds, as I said, bond price is down, so that's going to hit the 60/40 down 1.2. GROTECTION down 1.44. A bunch of stops hit. We reduced exposure by about a third based on the action. So let's get into the charts and the tail of the tape. But first, let's get into the team here at Revere. Trend following. The trend was really pretty, as I said, optimistic yesterday. Follow through to the upside after a positive upside at the close on Friday, but all that undone after 10 o'clock today. And if you're interested in somebody that pays a lot of attention to what goes on, doesn't just stick you in a pie chart, call you 4 times a year and send you a desk calendar, give us a call. If you're a client, you be on the lookout. Last night, Danny emailed you our quarter end video that I did that gives you insight into what the market did in Q1 and our moves based on our interpretation of what's going on. If you don't see that, please contact us. Email me, don@revereasset.com, so I can get right on that, or dan@revereasset.com. If you're interested in anything else about the firm, you can also email Tim Hunter or Mural at revereasset.com if you want to talk to the big cheese. The head honcho, the main man, Dan, is at 855 Real Wealth. That's 855-732-5932. Let's get to the ugly. The charts here. We'll start off with the S&P 500, bring up the tail of the tape. So let's start at the top. We added caution. Nothing has changed with any of the headwinds. Put call ratio spiked at the close. VIX up 13% as we just dripped lower after 10 o'clock. All day. We're still operating under the bull case, but again, with caution, because we did have a follow-through day. The S&P 500 is still above the 21, the 50, and the 200-day moving average. But the bear case, got to pay attention to it. We cannot get the NASDAQ 100 above the 200-day moving average. The NASDAQ 100 typically leads up, and it leads down. And if it's acting weak, the odds are the market's going to be weak because of how tech-heavy things are. So news this morning, Elon Musk took a stake in Twitter yesterday. This morning, joined the Twitter board. Let's see if he can do something about their free speech suppression that they seem to be pretty fond of on Twitter. Fed minutes tomorrow at 2 o'clock Eastern time. These are the minutes that came out from the last meeting where the Fed raised 25 basis points. The prevailing thought is going to be, and was confirmed by somebody who was considered a dove on the Fed, in other words, somebody who was not in favor of raising interest rates quickly. Lael Brainerd came out 10 o'clock today, and rates spiked, and the market had a negative reversal on her comments about tightening quicker to combat inflation. The market did not like that in any way, shape, or form, and had a quick negative reversal. Two things we were watching coming in today: how are the S&P and the NASDAQ going to do against these Friday lows? I talked about how this is an inflection point. We're still above them on the S&P and the NASDAQ 100, but definitely showing weakness, and the NASDAQ 100 cannot get above the 200-day moving average. It failed yesterday, and it failed today. Action today, a little bit of a gap down, quickly went to positive, and then Brainerd sparks the negative reversal trend down on the day. So pay attention to these notes here. When we have an inflection point, it's very critical that you want to pay attention to the highs and the lows on that day. I consider Friday an inflection point. Let me tell you why. Here is where we stopped going up on the 29th. That was on Tuesday. Then we had a 2-day pullback, Wednesday, Thursday, and then Friday continuing the day 3 pullback where we bounced right above 4,500 and finished strongly and at the highs of the day. So at that point, enough selling from the bear standpoint. The bulls took the ball back from them, and we tried to, and then we want to see what happens from there. Yesterday, positive follow through to that. A lot of nice setups today, but look at the big red candle outside, negative reversal. Closed near the lows of the day. First made a higher high, then reversed and went below the lows of the day. That's not good. The only positive thing I can say about it is we're still above the 200-day moving average, also above the rising 21, and the 50 has curled up, and we're above this 4,500 level. That's a very big level to pay attention to. Write that down, S&P 500 45, and then right below that, 44.89 is the 200-day moving average. The 21-day should cross above it if we continue to hold up later this week. So what held Friday's lows? These are, when you have an inflection point, as I said, you want to pay attention to the high and low. So what held the lows of Friday? The S&P has held. Also, the NASDAQ 100 has held. But again, NASDAQ 100 ran into the 200-day moving average, stopped there at the close on Monday, reversed as it was trying to rally Tuesday, closed near the lows of the day, but still above the positive reversal that happened on Friday. So it's like Bill Murray said in Caddyshack, so I got that going for me, which is nice. But definitely need to exercise caution unless those lows hold. Those lows hold, most of the market, or at least the big caps, will hold. What else has held up Friday's lows? Dow Jones Industrial Average has. Let's take a look at that quickly, as we always want to go through the indexes. But what two indexes have not? Mid caps, not even close to holding it, and small caps, IWM, also not even close to holding it. And by the way, all of the G6 broke Friday's lows also. No love from growth stocks. And okay, so what else did hold? Oils were split. USO has held. That's the price of oil. And oil producers have held, XOP. But oil services did not. When it broke, our stop got hit on Halliburton today, so we're out of that. Some other things that have held, fertilizers and steels, and also Tesla. Tesla had that big positive reversal today. Or yesterday, big break above with above average volume from this little flag, looking good. Not so good today, volume just about where it was yesterday, and a hard reversal. We added to this position yesterday and sold half of our add. We still have about 3% size in this with tight stop looming. And Nucor and CF, so steel stocks still holding up. Nucor, one that we took profits on a while ago, have been considering a re-entry, but it's just going sideways. And CF, very strong fertilizer stock, also holding, also consolidating, and another one that we sold into strength on about a week and a half ago. So that's the good stuff. That's what's still holding above. I mentioned IWM broke below that. Small caps, mid caps broke below. Growth, mid and small all broke below. The SOX has turned from one of the leading tech indexes to just an absolute nightmare ever since Taiwan Semiconductor CEO came out talking negative about growth last week, making new lows, not even close to holding last Friday's lows. Semiconductors terrible. Shippers, not a socioeconomic expert, but when transports have been garbage too. Look at IYT. Well below Friday's lows, and Friday was a big move down here, but transports across the board have really Zim is the leader, ZIM, and that's going to come off the 21 over 21, barring a nice bounce at the 50-day moving average here. What else has broken? I mentioned OIH broken. Two things that we were holding. MP sold half of this today. Very strong, but broke Friday's lows, broke the 80 MA. Still consolidating, still holding it, but when you add exposure and you get a negative reversal and you go negative right away, there's no reason to hold on to that. We don't wish. We've got our risk parameters in place, and that's one of them. When you buy something that acts well and then it systematically turns and reverses on you, at that point you're just hoping that it holds up, not obeying what's going on with the market. And then one we got stopped out on is just continued lower is Bros. Finally broke the 21 and have been holding there for a while, but it did bounce at the 50-day moving average. So anything that you're holding, compare it to Friday's lows, similar to the exercise that I just did. Sectors today, all defensive sectors doing well. PUVRE, that's staples, utilities, healthcare, and real estate. Those are the four that finished green, and they are all defensive, and that tells you something about today's action. We started off green and looking really good on oils, gold, silver, and gold stocks, steel stocks, and uranium stocks. They all turned negative by the end of the day, and that's a little bit of a change also. You had been seeing commodities hold up while growth type stocks have been reversing. Today we had just red across the board. CKY, I call this Chucky because it looked like Bride of Chucky today. Those are communications, tech, and consumer discretionary, CKY. These are the three growth sectors that are part of the spiders, and no bueno on those today. And bonds, as I mentioned, awful. Semiconductors, awful. And software, bad also. So we sold QLD when it reversed into the 200-day moving average, took a very small loss on that. Sold our last piece in NVIDIA as semiconductors continue to act garbage, locked in a small profit on that, locked in a small profit on Halliburton, trimmed, as I mentioned, the addition of Tesla that we did yesterday, and also trimmed MP. Bottom line, caution, harsh negative reversal is an expectation breaker. Let's see what tomorrow brings on the market, but definitely not anything kind I can say about the action today. I talked about the bad, the ugly, the good is the S&P and the NASDAQ 100 for right now, holding on to their to Friday's lows, and the S&P holding above the 200-day moving average. Reminder, the market never gets into a bear phase until it breaks the potential for a bear phase until it breaks below the 200-day moving average. We protected, we're very defensive all throughout this process. In the first quarter, had the follow-through day on the positive reversal on the Fed, giving some of that back now. Really, from a context perspective, again, we've only given back about a quarter of the gains, but the selling feels worse. And if you look at what we want to go up, IWO, growth, broke Friday's lows. This nice big gap up here on the 29th, all of the G5 indexes did that, gave us hope, but it didn't take long before they've now made lower lows twice. And again, that's an expectation breaker. So the G6 not doing what it needs to do, and now finally some weakness, negative reversals today in a bunch of the commodity stocks. Keep an eye on those. So let's see, that's going to wrap it. As always, love to hear feedback. You can email me, don@revereasset.com. If you want to talk to Dan, you can call 855-REAL-WEALTH. But for now, we're adding caution to the uptrend on a negative expectation breaker in today's action. So wrapping up, Tuesday, April 5th. This is Don Vandenbord, telling it like it is, fact-based, no opinions. Thanks for listening. Have a great day.